In today's video, I am going to be breaking down some of my top 5 favorite tech dividend stocks. Now, there's actually a very good reason why I am making this video. It's because I think that there's going to be a little bit of downward pressure overall on the stock market, mainly because of the debt ceiling and, of course, all of the different debt stuff that's happening with the United States. And when it comes to tech, it doesn't necessarily come down to what the government is doing. It's not the same as what a bank will be looking at. So this is all of the top 5 dividend tech paying stocks that I personally like. That way, even if there is a little bit of downward pressure, we can still get paid our dividends. So the first company is Texas Instruments TXN. Now, the reason why this is really good is because, of course, they are a chip company and they pay 2%, which is better than interest, not as good as some of the banks, but better than interest. And right now, there is a worldwide shortage of microprocessors, and that is one of the things that this company makes. It trades at a crazy volume of 4.3 million shares every single day, and its 5-year monthly beta is 1.03, which means that for every 1 point that the stock market goes up, you are looking at 1.03 of this stock going up in points. So, of course, that is something that will outperform the market in theory, at least over the last 5 years. It has to that ratio. Its PE ratio is 28, which is one of the cheaper chip stocks on the stock market, and its 5-year chart is absolutely amazing. When we're looking at this chart, we're looking at something that was trading at around $70 5 years ago, now trading at $188. It's had some downturns. Of course, this was, the virus, but from there, it's had a very nice run, and right now it looks like it's starting, just like every other tech stock, starting to trade within a range, which means that it should break out or, of course, fall. Depending on the length of chart that you actually look at, if you look at the 5-year chart, or even the 3-year chart, this is looking like it's starting to create a flag. However, if you look at I think it's the 6-month chart, it looks like it actually broke below, but now it's actually back above at 188. So it's kind of interesting how this is really formed. I'm going to say that it really does look like it's going to break above this flag. The other thing I really do like about Texas Instruments is the fact that their dividends get raised all the time. And of course, they do some pretty substantial dividend raises, as we can see here. Now, they've beaten all of the last 4 quarters. And, of course, they are doing extremely well, in my opinion. In 2020, their revenue was in line with 2019, but below 2018. However, their earnings are higher by a large amount versus 2019, and in line with what they did in 2018 with less revenue, which is kind of promising in my own personal eyes. Taiwan Semiconductor TSM is the next stock that I'm going to talk about. This one has a 1.5% dividend. However, the thing that you really have to watch out for with this stock is when it comes to Taiwan, the Chinese government is really starting to be on the offensive, and they want Taiwan to be back part of China. Now, will that happen? I'm not too sure. Nobody really knows. Will the U.S. defend Taiwan? Who really knows? At the same time, however, it is something that we should pay attention to. And if it is something that does start a war, I'm not too sure if this would be a good stock to get into, because if a war was to break out between Taiwan and China, China would be able to take over Taiwan quite quickly. The U.S. and other allies would have to jump in quite quickly. And I can tell you right now, if that was to happen, Taiwan Semiconductor would probably tank, because most likely the Chinese government, if they didn't want their factories to be in U.S. hands, they may just bomb the factories. Now, this is all hypothetical, but it's still something to really pay attention to. And if we ever get a hint of a war that just may start breaking out over there, I would definitely be selling this with just quicker than that snap, because you would want to be out of this if that was to happen. However, they do trade at an extremely high volume, so if you did want to sell it quickly, you should, in theory, be able to. At 8.9 million shares, it should be quite easy to get out of. Its beta is also pretty well in line with the market, so wherever the market goes, in theory, Taiwan Semiconductor should also go. Its PE ratio is also a bit higher than Texas Instruments, and they have had a ridiculous run lately, and of course they are also setting up with a flag, which is quite interesting to me. However, that is starting to trade sideways no matter which way that you want to look at it. So to me, it also has a double bottom, which is quite interesting. This is some of the things that you want to see, so it could run just a bit. But overall, I really like how this chart looks on the 5-year scale. They do pay a dividend. It is kind of a random dividend. We do see that they have paid some pretty ridiculous dividends in the past. However, now they are pretty well standardizing it around that 40-cent range. They've also done really well in the last 4 quarters. Their revenue in 2020 was ridiculous, and their earnings was actually absolutely insane. Overall, fantastic 2020, and I'm going to say that's going to be another great 2021, I should say, as long as none of this political stuff happens, which I just hate politics in general. Next is Microsoft. Microsoft is, of course, the darling child of the stock market right now. We see that their beta is quite a bit lower when it comes to where the stock market moves. It only also has a 0.8% dividend, and if you're looking at the PE ratio in terms of chips, well, they're not too bad. However, if you're comparing them to other companies that are in the same space, they're still pretty cheap. And when it comes to volume, 25 million shares traded per day, you should be able to get in and out of this quite easily if you wanted to. Their chart has also had some fantastic consistent growth, not many huge downturns or huge spikes, other than, of course, when the virus hit. But that's really recovered since. However, as we can see, not much volatility up until that point. But since then, there has been some pretty crazy volatility up and down. Even though it's not massive spikes, there's still pretty good 5-10% jumps. And at that point in time, you could play that. You could wait for a little bit of a pullback. It's totally up to you. However, whenever there's more volatility, it's really going to be playing on your emotions. You may say it's fantastic one day and you might want to sell the next. So of course, if you're getting into the stock for the dividend, which this one doesn't have a massive dividend, definitely don't get into the day-to-day activity. But if you're looking to maybe hold it for a month, you can get into the day-to-day activity and see when you want to sell it. We can also see that they raise their dividend pretty regularly, not massive raises, only about 10%, roughly 9-10% raises. However, still a pretty good raise year over year when you start thinking about it. Their revenue is always on the incline. Of course, 2018's earnings wasn't that great, but again, still growing earnings year over year. This is fantastic, great quarters. Great stock overall. Next is Comcast. CMCSA is the ticker. And Comcast is a very good company in my opinion anyways. 1.7% dividend, so not massive either, but you're looking at an amazing volume of over 16 million shares traded every single day. It usually performs a bit better than the market as well, and its PE ratio when it comes to tech stocks is actually quite low, so overall very strong company. It does tend to trade within a range. However, at the same point in time, we do see some massive routes which can give us a great opportunity to buy in. Right now, it's not having a route. It's on the incline. Will it continue? It's hard to say. Most tech stocks are starting to create this flag, which could go positive or negative depending on the outcome of if it dips below the bottom or the top of the flag. If it goes above the flag, it's going to run. If it goes below the flag, it's going to run downwards. It does regularly raise the dividends, just not by a ton, only by a penny or two, depending on at which time. So it's not going to be a massive increasing dividend company. However, still pretty solid considering what's happening right now. Quarterly, it's doing really well. Revenue doing extremely well. Earnings are, however, down, which is kind of concerning in my opinion. And then the last stock is Apple. Now, this is a stock where if you basically own an Apple product and you like the Apple product, you should probably buy the stock, because at that point in time, you could literally use the dividends if you buy enough of it just to buy more Apple products, which is something that I would do if I had enough Apple stock. However, let's get down to it and let's really check it out. Trading at $133 per share, average volume is 84 million shares. This is something that a lot of funds hold, a lot of people hold. Its PE ratio is 29, which is actually around where you would think a tech stock would be, at least a blue chip tech stock. And then you're looking at a market cap of $2 trillion, which this is one of the largest companies in the world. Obviously, that's debated by a few people. And of course, 0.6% dividend, not huge. However, it still pays you to hold it long term. It's had an absolutely fantastic run since about a year ago when the COVID market breakdown happened. Now, this is actually forming into an interesting flag style double bottom chart, which is quite interesting to me. From there, they do raise their dividends regularly. It's just not massive raises. And when it comes to their quarterly earnings doing extremely well as their revenue being better than the year before when it comes to last year, and their earnings doing better as well. I hope this gives you some ideas and some thoughts as to what to invest in, or at least some ideas or things to look into over the next month or so. If it has, hit that like button and subscribe, and I'll see you guys again next time.